On Wednesday, May the 22nd, the UK CPI data will be released. Now, this CPI print is in major focus as investors want to know whether the Bank of England is winning the inflation battle or not. A surprise print to the upside or the downside is likely to send the pound on a sharp move, but how much of a move can be expected? This is where Seasonax's event screener is so helpful. Here you can see the pound dollar over the CPI release from the last 5 years. You can see that this is looking at the 3 days after the release, and just look what we can see. The maximum gain has been 4.14%, but notice that the actual maximum was 4.80% during that period, so a pretty huge gain. Also, look at the maximum loss. It's minus 2.10%, but when you look at the detail, you can see that that actually went much further lower, and it went to minus 2.26%. And you can see this by looking at the maximum drop column. And if you just go down the column, you see here that the maximum fall was actually 2.26%. This is based on the close over those last 3 days. You can also see there's quite a few events where the price moves around 1%. So this starts to set expectations. You could go into this in a lot of detail, or you could use it just to give you a rough idea of what sort of volatility to expect on a surprise CPI print on the pound dollar. And if you just take a look at the expectations, markets are expecting 2.1%, down from the prior 3.2%. So if that comes in below the 2% target for the Bank of England, that's likely to send the pound sharply lower. Definitely one to watch. And of course, we're looking at the print as a general reading, and the services sector is a big focus from the Bank of England. So a big miss in the CPI services metric, and we could see some significant downside in the pound as long as the other metrics miss the downside as well. So definitely one to watch. And just look at the pound, you can quickly see, look, that's a plus 1% gain, that's a minus 1% gain from current prices. So you can begin to tie that in with overhead resistance levels, support levels, and it can help you set expectations. All outlooks have risk, of course, and this is no exception. And the major trade risk here, of course, is at the CPI release. If it comes in as expected, volatility may well be muted. Remember, don't just trade it, Seasonax it.